Members of OPEC are set to continue their two-day meeting today to discuss their oil production plan. This comes ahead of President Biden's trip to Saudi Arabia later in July to work on getting their oil production targets back on track. Oil prices currently slightly lower right now. WTI at 109.13 and ICE Brent is at 115 right now. Joining us is Helima Croft, RBC Capital Markets Global Head of Commodity Strategy. Helima, great to see you.
Thank you for having me on.
It sounds like it is not expected for OPEC Plus to do anything with their production targets. Is there any hope for President Biden that he gets Saudi and or UAE to increase their production?
I mean, the real hope for the Biden administration is when they make that visit to the kingdom in the middle of July, that the Saudis and the Emiratis agree to essentially go beyond what OPEC is doing and add more barrels back to the market. We do not have a lot of additional OPEC oil out there. We had French President Macron doing his hot mic take to Biden this week, essentially saying that OPEC is out. Now, we think the Saudis in the near term could potentially add about an additional 1 million barrels. But again, we're facing the prospect of losing significant Russian quantities when those European sanctions kick in January. And we have other countries like Libya experiencing disruption. So there's simply not a lot of additional OPEC oil out there.
What does the ban on Russian oil do later on, and how do the price caps work in? What kind of shortage are we looking at? How many barrels are going to be taken off the market?
I mean, Melissa, this is the most important question, I think, for the market going forward, is we've already lost probably about 1 million, 1.5 million barrels of Russian oil because of self-sanctioning. Companies essentially saying, we can't touch this. But when you think about what happens on January 1, Europe, the largest market for Russian oil, essentially goes out. No seaborne imports will go into Europe. Russia will not be able to ship oil through Germany through pipelines or Poland through pipelines. So then we potentially have 2.2 million barrels that are going to be searching for a home. Now, this could obviously push up prices. Hence, a price cap plan being pushed by the U.S. Treasury comes in. That would essentially say European insurers and shippers could ship the product to places like India. If India essentially turns around and says to the Russians, we have to demand a very, very steep discount. But the problem is, are insurance companies going to enforce a price cap? The question is, how are you going to set the price target? And more importantly, are the Russians simply going to sit back and say, you know what, we're going to accept a massive discount and continue to supply the market? It really basically runs the risk that the Russians say this summer, we're going to start cutting you now in terms of oil exports and drive prices up.
So what dynamic does China coming back online play into all of this?
I mean, that is another tailwind for oil prices. And again, this is the real challenge for the Biden administration is what has been holding back prices is fears of recession. If those fears start to fade at all, we have a tight market. Again, not a lot of additional barrels out there. And if China comes back as a significant buyer, that's only going to push prices higher.